Hi friends, good morning, good afternoon, good evening. How are you all? Yes, I'm good. Welcome back to our one more video on the national income. Yes, in the last class, we were discussing about the national income concept. The national income. Sir, what is national income? As we told, as we told, it is the money value of all the goods and services which are produced in a country in a given period of time. Based on that, again, we discussed some important concepts, mainly four important concepts. They are constant versus current, gross versus net, market price versus factor cost, and national versus domestic. I think you already got a crystal clear idea on that. If you haven't watched that video, please watch the class 1 video, then come back to this class 2 so that it will be very fruitful for you people. I know there are some small concepts which we have left out. Don't worry. First we cover all the concepts which are very important from examination angle. Then regarding the some miscellaneous concepts, we will cover at the end of maybe this chapter. Is it okay? Shall we begin? Done. So what is constant versus current? We'll take a minute and revise and we'll move forward. Constant is something whenever you measure your national income using the base year prices, we call it as constant national income. National income at constant prices. It is always at the base year. What is current prices? When you measure the national income using the, when you measure your national income using the current year prices. Sir, what is the difference between constant prices and current prices? The difference between the constant and current prices are increase in price or change in price. That on a summarized basis we call it as inflation. You understood that in the last video only? Yes. So whenever you measure that using current price, we call it as national income at current prices, or if it is a constant price, then we call it as national income at constant prices. The constant prices does not contain the inflation. That is why we call it as what? National income. Is it real or nominal? Anybody? Pause the video and think. The constant prices is also called as what? Is it real or nominal? And current prices is called as what? Is it again real or nominal? Then again we started discussing gross versus net. We called it as gross versus net. The difference is depreciation. The depreciation is also called as consumption of fixed capital. Yes. Then again we went to market versus factor cost. What is factor cost? The cost of all the factors of production. The cost of all the factors of production which are there in an economy. For example, we have 4 factors of production, that is land, labor, capital and entrepreneurship. And the return for those things, the cost of those things is the rent, the wages, the interest and the profit. If you add all the 4 things, we will call it as factor cost. But only one thing which we have to keep it in our mind is, if there is any cost which is earned by a self-employed person, which can't be categorized into either rent or individually wages or again interest or again profit, then we put it under a separate head called as MICE, mixed income of self-employed. So what is that factor cost? It is rent plus wages plus interest plus profit plus mixed income of self-employed. Done? Yes. But you should not forget that we also highlighted that the rent, the interest, the profit, all the 3 combined together, we called it as what? S please. Operating surplus. And the wages is called as compensation to employees. Then can we say factor cost equal to compensation to employees plus operating surplus plus MICE? Yes, it is very much right. Then again, what is market price? The difference between market price and factor cost is the 2 things. One is indirect taxes, which is paid on the goods. We call it as product taxes. And for the purpose of taxes, after payment of tax, sometimes the product also receive the subsidies from the government. If you net it out, for example, the factor cost plus indirect taxes minus subsidies, or factor cost plus NIDT, it is net indirect taxes. Both are same, you'll get what? Market prices. Is it okay? Done, sir. Again, we will continue to this domestic versus national. What is domestic versus national? All the goods and services which are produced in an economy, whether it is produced by Indian citizens or foreign citizens, Indian companies or foreign companies, it doesn't matter. If it is produced within a territorial boundaries of a country, we call it as domestic. For the purpose of national income, you should add NFIA, net factor income from abroad. So what is net factor income from abroad? Net factor income from abroad means any income which is earned by Indian people working outside India. You have to add it out and minus the income earned by the outsiders who are working in India. And if you take it out, we call it as domestic plus NFIA. We call it as national. That is what we discussed. And we linked that concept of domestic plus national into all the four concepts into different concepts of national income. Sir, what is different concepts of national income? We discussed GDP at MP, GDP at FC, again GNP at MP and GNP at FC. Again the same things, market wise, market plus factor cost for the NDP as well as NNP also. Gross domestic product, gross national product, net domestic product and net national product. Both can be found out using the market price also, or it can be found out using the factor cost also. All those things clear? Yes. We'll continue. So it is better to revise on a continuous basis. It takes some hardly 5 minutes, then we'll move forward. You should think about that thing. You should not forget constant GDP is also called as what? Current GDP is also called as what? Is it which is nominal, which is real? Don't forget. Think and come to a conclusion. And compare your answer with the answer which we discussed in the last class. Is it okay? Shall we continue? Where is the energy, guys? Come on, come on. Just now we are starting the class. So continuation to that, there is a concept called as, GDP, not GDP, measurement of national income, in India. How do we measure the national income in India? Sir, before discussing that measurement of national income in India, I have a small concept to discuss that everybody knows that. The concept is called as circular flow of income. Circular flow of income. Sir, what is circular flow of income? Here there are some assumptions which is made by economists. The first assumptions are there are only two sectors in an economy. What are those two sectors? The two sectors are, one is, we call it as household sector. Second one is business sector. What are those two sectors? Household sector and business sector. And the next assumption is, as we need the factors of production for the purpose of production of goods and services, those factors of productions are entirely held by household people. That means all the individuals other than the manufacturing and producing enterprises, all the individuals are owning all the factors of production. Sir, okay, we understood. What's next? It is like all the household who are having the factors of production lend that factors of production to the business sector, factors of production, for which they receive back factor payment. Then what happens? This is one side of the story. The second side of the story is the factors of production. Using those factors of production, the business sector will produce goods and services, and those produced goods and services again sold back to the household sector. Can I call it as goods and services? Are given to the household sector, for which they have to pay in return. Sir, what is that return? The return is for, we call it as price. Sometimes it is also called as compensation to goods. compensation to goods. So you understood this? What do we call it as? We call it as circular flow of income. Where the income is flowing in a circle, it is not going outside the circle. Sir, what is that income is flowing in a circle? What does it mean? That means earlier I am having, consider I am a household, you are a business sector. I am having all the factors of production. Consider 100 rupees worth of factors of production. I gave factors of productions to you, then I received 100 rupees. Using the same 100 rupees, I again spend that 100 rupees for the goods and services you have produced. I give it back 100 rupees, I take the goods. Now you have 100 rupees. Again, you borrow factors of production from me. Again, I get 100 rupees. Again, I buy the goods and services. It keeps on moving in a circle. We call it as circular flow of income. That is why there is an interesting point which everybody has to make an observation regarding this. Now, can I say the factor cost, whatever it is there, for example, I received 100 rupees. Can I say it is equal to price of goods and services, because I spent that 100 rupees again on goods and services. When I say I spend, can I call it as it is expenditure by household sector? Yes, because I spent 100 rupees, that is my expenditure. When I spend it, it should be income of somebody. Sir, whose pocket it goes? Again, it goes to the pocket of the income of business sector. It is the income of business sector. Sir, whenever I say the income of business sector, again they use the same money for the purpose of borrowing the factors of production from the household. Again we say it is value of factors of production. Value of factors of production. Whatever you take, the income is still 100 equal to 100 equal to 100 equal to 100 rupees only. It is not going outside. There is no injection. There is no leakages. Is it clear? Yes, sir. It is okay. Now we shall continue measurement of national income in India. How do we measure the national income in India? If you understood the circular flow of national income, we'll continue that measurement. For that, the same circular flow of national income only, I'll try to divide it into the three parts. Triangular part. Sir, what is the triangular part? Yes, one is, in India, there are three methods. Production method, income method, and expenditure method. Production method, income method, and expenditure method. I can use any of the following method and I'll get, irrespective of the method I use, I should get the same level of national income, same income of national income. So, sir, what is this? When I have all the factors of production as an household person, when I have all the factors of production, I give that factors of production for the purpose of business sector so that they can manufacture the goods and services. Yes, sir, they'll use it. When I say I give the factors of production, I'll receive as an individual, I'll receive the income. I gave the factors of production for the business sector. That given factors of production for which I am receiving the income. And whatever the income I receive as an household, what do? I do the expenditure. Yes, sir, the expenditure has to be done. Expenditure on what? That is what the question is. Again, expenditure on for the purpose of buying of goods and services. Yes, sir, again, it has going back to the by way of prices of the goods and services. The same thing, whether you manufacture, whether you go for production method, whether you go for income method, whether you go for expenditure method. Irrespective of the level method which you are using, it is the same national income. Is it okay? Again, I am repeating this very important concept. It is the measurement of national income in India. In India, we measure the national income. We can measure the national income and among any of the three methods. One is production method, income method, and expenditure method. Revise along with me. Open your mouth and start telling it. Production, income, and expenditure method. So production method means it is the value of goods and services. For the purpose of production of goods and services, business sector will buy goods and factors of production and they give factor payment. That factor payment is an income for the household. That household's income is spent. That means it is an expenditure for the purpose of consumption of goods and services. Is it okay? For the purpose of consumption of goods and services. Is it okay, sir? Yes, sir. You do irrespective of any method, you should get the same level of national income. Theoretically, it is right. See, whatever I'm talking for the next 1 or 2 minutes, that is not relevant for examination, but I'm just giving the holistic idea how it is happening and what it should be like. See, even though I say production method, income method, expenditure method, theoretically as per economics we should get the same level of national income, but because of some inherent limitations which are there, challenges as well as limitations which are there in computation of national income, that leads to maybe what is that, mismatch in computation of national income, either in production method, expenditure method, or income method. Sir, any examples? I'll take 2-3 examples. We will discuss that limitations. We will not discuss, we have to read it, or we will see whether can we discuss or not in this video, in some other video. So when I say production method, consider I am a farmer, my parents are farmers. Whenever we produce something out of our farm, consider we produce some 100 kg of paddy, do you think we will consume all the 100 kg or we will sell all the 100 kgs? No. Some quantity of the paddy is kept for our consumption, and the remaining, consider we kept 10 kgs, the remaining 90 kgs are sold in the market. Whenever somebody asks, how much did you grow? I'll just say that whatever the commercial sales has taken place in the market, only that I'll say. For example, I sold it at 1000 rupees per bag, 1000 rupees per kg, 90 rupees 100 rupees multiplied by 90, that is how much? 9000 rupees, that's it. But actually, how much did I produce? I was giving the information about the sales, but I should not give the information about the sales. I should give the information about what? Regarding the production related part. Sir, what is that production? I produced 100 kgs. I should always count it as 100. That means any production which is happened for the purpose of consumption of the self is excluded many of the ways. Consider we are having some cattle, we have some buffaloes, cows, everything. Whenever we take out the milk from the buffalo and all those things, we keep 1 or 2 liters for ourselves, and remaining thing we will sell it outside. How much we have sold? That is the only thing which we give to the like for the purpose of counting the economy. But whatever is done for the self consumption also, that has to be counted. That is ignored. That is why we are going to get the mismatch in the all the 3 methods. When I say income, because of the hidden income. Sir, what do you mean by hidden income? The income which is there by way of black money, or the income which is there for which the taxes are not paid, both one and the same, or income which is there for which the people are trying to do the hawala somewhere. Because of those things, we might not get the equal or accurate level of national income. Again, expenditure method also, we spend so many things on ourselves also, that is also not counted. That is the reason, few reasons they are given the challenges and limitations. We can discuss it later. So that is why the income, expenditure or production method, the income will not be same. Understood? Yes. We will continue now using the first method, that is production method. The first method, that is production method. Using the production method, how do we compute our national income? Sorry. Using the production method, how do we compute the national income? Using this, when I say production method, can I say our country has many producing enterprises. For example, production does not need always be the goods. The rendering of services also considered for the purpose of that. We are giving educational services. Somebody is producing the steel commodities. Somebody is producing the cement. Somebody is producing the agriculture things. Somebody is giving the banking services. Somebody is giving the healthcare service, hospitality service, etc. How do we compute the national income? As I earlier told, it is the money value of all the goods and services which are produced in a country in a year. So under this, actually, for the purpose of finding out national income, we divide our economy we divide our economy into three sectors. We divide what? Into three sectors. One is primary sector. You tell me how many sectors are there in India or in an economy? As we already discussed, it is three sectors. Second one is secondary. Then third one is tertiary. Tertiary sector. And when we divide the economy into sectors, these sectors are subdivided into subsectors. Sir, what is subdivided into subsectors? If I take an example of secondary sector, there is steel sector, cement sector, subsector I'm talking about. Again, the construction, manufacturing, there are so many things. If I say again, I'll divide into steel industry, then again cement. For representation, I'm discussing this as an example. Then again, it comes car manufacturing. And like the same secondary sector, in case of primary sectors also, we can divide that into maybe what? Can you tell me? The primary is agriculture, maybe dairy farming. Then it could be poultry farming. Then it could be animal husbandry, or it could be in any type of activity. In case of tertiary sector also, again it can be divided into educational services, again banking services, again healthcare services, again hospitality services. Any type of things it can be divided. Just for representation, I am taking secondary sector. Under steel industry, I will divide that steel industry, if you remember, into producing enterprises. What is producing enterprises? Can you name few steel producing companies which are there in India? For example, yes sir, the primary name that comes to our mind is Tata. Then the secondary, for example, JSW. Then comes Indus. There are so many steel companies. Again, when it comes to cement, again there are so many companies. One is ACC, Ultratech, again Ambuja. There are so many cement companies. When it comes to car manufacturing company, again Tata is there. Again Suzuki is there. Again what? Mahindra. Not Mahindra Singh Dhoni. It is Mahindra Car. So there are so many types of companies. You just think with a common sense, Tata Steel. For the Tata Steel company, knowing or finding out the national income is too difficult. I agree. But isn't it easy for the Tata company, Tata Steels, to find out their own income? How much they have produced? Yes, Tata will always know that, because they also are, it is a company. It also has to comply with the Companies Act 2013. Again, preparation of the financial statement, Schedule 3 compliances. So many compliances are there, for which they keep track of all those things. How much they produced, how much they sold, what is the opening stock, what is the closing stock. Everything is there. Under that, it is difficult for the Tata Steel to know what is the national income, but it is easy for the Tata to know what is the total production. Yes, it is easy for Tata. Unlike it is easy for JSW to know their own production. Again for Indus TMT, those companies. Now, if you think, basically, if I add Tata plus JSW plus Indus plus all the steel companies which are there in economy, won't I get the steel industry which is there in an economy? Total of steel industry? Yes, the same ACC, Ultratech, Ambuja. If I total all the other cement companies also, won't I get cement industries total? Again, Tata Motors, Mahindra Motors, Suzuki, again Hyundai. There are so many companies. If I total all these things, won't I get the car manufacturing? Unlike the same, there are so many subsectors also. If I total these producing enterprises total, I'll get the total of steel industry. If I total steel industry plus cement industry plus car manufacturing plus other subsectors which are there, Won't I get the secondary sector total? Yes, sir, we get it. When I total it secondary sector, the same way I'll go from bottom to up for primary as well as secondary tertiary sector. Primary plus secondary plus tertiary. We call it as the total, the value of goods and services which are produced in a country in an economy. This is how we calculate the GDP in an economy using the production method. Sir, what did you tell? Yes, I'll try to consolidate and summarize. You please listen. First one is under production method, we divide economy into sectors, and again sectors are divided into subsectors, and those subsectors are divided into, we call it as producing enterprises. Producing enterprises, maybe goods or maybe services. And if you total up this producing enterprise, you get the subsector total. If you total up subsector, you get the sectors. If you total up that, you get the economy's total. Sir, you tell me, what did we discuss? As I again tell, summation of money value of goods and services in an economy in a year. This is what we told. In an economy in a year. Sir, what is this? Is it national income? No. This is what we told. It is GDP at MP. Because GDP says that thing only. Sir, what is national income? As we know, national income is equal to, it is also called as NNPFC, net national product at the factor cost. Yes, sir, we already know. When you find out GDP MP here, when you find out GDP MP, can you find out NNP at FC using GDP MP? Yes, you have to use that plus minus approach. I'll give just one example. NNPFC equal to GDP MP. Now what do we have here? We have gross, we need net. That means minus, try to recollect the things which has happened in the last class. Depreciation, we have domestic, we want national. That means plus NFIA, we have market price, we want factor cost, minus NIDT. This much speed you should always try to maintain that plus minus approach, because it is very, very important from examination point of view. You can't waste out the time thinking those things, plus or minus or no. Try to revise that 4 concepts which we discussed already: constant, current, gross, net, market factor, and national and domestic. Then yes, sir, we understood this. National income can be found out under production method. Can I say or as a special point, instead of special point, because my name is Veeraj P, can we do it as VP points? It is just like, I feel like this thing, VP points. The first thing under VP points is, if I say this one, if I want to summarize, it is, see, whenever I mention this is VP point, it is important from examination angle mainly. First one is under production method. The production method, we always get GDP at MP. From there we have to reach to national income, that is NNP at FC, national income NNP at FC, using plus minus approach. Using plus minus approach. Yes. One thing we clear is whenever the data is given as production method, it is we always get the GDP-MP only. From GDP-MP we have to reach to NNPFC using plus minus approach. Is it okay? Done. Then we'll continue. Again, measurement of national income using income method. Using income method. Under this measurement of national income method, sir, how do we get the national income? It is very simple. It is the easiest method which we have here under all the three methods. One is, when I say income, can I say income is received by whom? We already discussed in circular flow of income by household people. Yes, sir. For why they receive the income? Because they give the factors of production, they receive the income. Yes, sir. So whenever you sum up the factor income or whenever you sum up the income received by all the factors of production, then you will get the total factor income. You just think normally for how many factors? Land, labor, capital, entrepreneur, for which we receive rent, for which we receive wages, for which we receive again interest, again we get profit for this. You should not forget the other names of these things: operating surplus, compensation to employees, again mixed income of self-employed. For this we have to add mice also. It is mice. Now when you add all these things, we get what? Factor income. Agreed. You tell me all the factors of production, are there in India or outside India? When I say summation of all the factors of production, I am just considering the Indian factors of production, Indian people. That means, first of all, we get something, maybe GDP, maybe NDP, I don't know. I keep 3 dashes here. And can I say all these things are factor cost? Yes, sir. That means whatever it comes by a factor cost only. By way of factor cost. Yes, sir. That is agreed. Now, is it gross domestic product? Is it net national product? What is it we are getting using the income method? You tell me. Is it within India or outside India? Sir, if it is within India, can I call it as domestic product? Yes, sir, it is domestic product. You think logically, is there any depreciation added here? No, sir, no depreciation has been added. That means, can I call it is a net? That means using the income method, we always get NDPFC. But national income can't be called as NDPFC. Then what is national income? National income means again NNPFC. Sir, how do we get it this NNPFC? Again plus minus approach. Sir, what is a plus minus approach? We want NNPFC, for which we have NDPFC. We have net. We want net. We have domestic. We want national. Oh, plus NFIA. We have factor cost. We want factor cost. Both are same. Is it okay? That means just by adding the NFIA, you get this NNPFC. Or there is one more method which I say used to recommend. It is under income method. National income will be, this is again BP point. National income will be computed computed using, I'm taking an entire method, that is rent plus wages plus interest plus profit plus mice. This is factor cost. Plus if I add NFIA, it is as good as NNPFC only. This is what we call it as NNP FC. NNP FC. Is it okay? Yes, sir. Done. Last but not the least, the third method which we have is expenditure method. Under expenditure method, okay, you tell me, why do people do the expenditure? We have many needs and wants. For the purpose of satisfaction of those things, people use their expenditure. See, I am not talking about what your personal expenditures are. I know what your personal expenditures are. Don't worry, I am not going to reveal that. You keep that personal expenditure with you thing only. So we'll begin. When I say expenditure method, who will do the expenditure in an economy? Because we are finding out the national income, who will do the expenditure? The expenditure is done by two. Actually, I call it as two, but institute has given by of three things. Institute is given by three people, but I broadly categorize it into two. You will understand. One is first one is by private sector. What is private sector? Other than government is private sector. Then again, second we take is by government sector. What institute has does is, institute has done, private sector has been divided into two parts. The first part they did is individuals and producing enterprises. Individuals and producing enterprises. Sir, what is individuals? Individuals is like you and me. Individual people. Producing enterprises are like companies. Tata, Reliance, Adani, maybe Infosys, maybe Wipro, maybe TCS. There are so many companies. Those producing enterprises. And when it comes to government sector, maybe IOCL, BPCL. There are so many Navratna companies, Maharatna companies, Mini Ratna companies, SBI, LIC. All those things are government enterprises. Those things are covered under the government sector. Sometimes government will do the expenditure for the purpose of development of a country. For example, maybe laying the roads, maybe giving the pension to the old age people. In Karnataka, it is being happening like giving not 2000, if I'm not wrong, it is 3000 rupees per month for the graduate, unemployed graduate. Again, for the women's, it is being given 2000 rupees. So any expenditure made by the economy, by the government in an economy is considered. But for example, whatever I have given, like unemployment doles given for the graduates, again 2000 rupees for the women's, that is again given. Is it any economic benefit is happening? No, sir, they are just taking it and enjoying it. Yes, those expenditures are not considered for the purpose of national income computation. Why? There is one very important concept to be understood here. For the purpose of computation of national income, we consider all the economic activity and value added activities. Sir, what does it mean? Indirectly, we are trying to exclude non-economic activities. What is non-economic activity? Any activity done by anybody, which does not contribute anything back to the economy. For example, in Karnataka government, Sidramaya ji is giving 3000 rupees per person. But is there anything good for the economy, Karnataka's economy? Nothing. It is zero. That is why those expenditures are not considered. So, in case of those things, we should exclude that. And a broader category, we call it that as unemployment, doles, pension, everything. We call it as transfer payments. What is it? Transfer payments. You will understand it in the further discussion. So, yes, sir, we understood these things. But again, I would like to classify this expenditure, whatever the expenditure is there, into two types of expenditures. Yes, sir, expenditure done by private individuals, private production enterprises, and government sector also. Three things are there. That expenditure is of what? Expenditure is of three types. Sorry, not three types, it is two types. Three economic enterprises doing two types of expenditure. Sir, what is the two types of expenditure? The expenditure is one is consumption expenditure. One is consumption expenditure. Second one is capital expenditure. One is consumption expenditure. Second one is capital expenditure. Sir, what is consumption expenditure? If I take it from the two angle, two perspective, with respect to government, what type of consumption expenditure government does? What is consumption expenditure first? Any expenditure which are recurring in nature. Any expenditure which are recurring in nature, may be repetitive in the year. For example, payment of salary to the government teachers, payment of salary to the government employees, payment of salary to the administrators, payment of salary to so many government employees. Those things are called as consumption, which are recurring in nature, continuously coming year on, what is that, month on month, maybe day after day, maybe anything, recurring, repetitive in nature. That is government. Repetitive. Recurring expenditure is called as consumption expenditure. Government, maybe for example, salary to government employees, like maybe army, navy, that air force, plus police, again teachers, then again administrators, etc. Again when it comes to private sector, like you and me, I'm taking it in the broader way only, like business sector as well as individual sector, both the sectors are considered here. They are, maybe for example, you and me, what do we spend for the purpose of having the food? Yes sir, it is repetitive in nature. For the purpose of buying the clothes, for the purpose of maybe fueling our vehicles, for the purpose of payment of rent to those landlords, or so many type of expenditure. When it comes to business people, what do they do the expenditure? Again, salary is the biggest expenditure, rent is also their expenditure, buying the raw materials is also their expenditure, which are recurring in nature. Monthly salary has to be paid, rent has to be paid, raw materials has to be bought on a continuous basis, payment of interest to the bank. Those things are called as consumption expenditure, which are day to day repetitive in nature. Example, raw material for business, I'm taking only one thing, and consumption of food, cloth, etc. by individuals. This is what we call it as consumption expenditure. Okay sir, we understood. What is capital type of expenditure? The capital type of expenditure are like, you tell me, which are non-repetitive in nature. Non-repetitive in nature. Sir, what is non-repetitive in nature? They are not going to recur year on year. For example, again I am taking that into the two parts. One is by government, second is by the normal people like you and me. So one is government, one is private sector. Under government, why does the government spends money? Government try to spend money for the purpose of, government try to spend the money for the purpose of, maybe when I say capital expenditure, who lays the road? Yes sir, government only will lay the road. Yes. Is it done on a daily basis, monthly basis, yearly basis? No. Maybe once in 20 years, once in 30 years. That is a capital expenditure. Government also construct the roads, bridges. Government also lays the street lamps. Government also construct that government buildings. Those things are called as government capital expenditures. Yes sir. Example. Construction of roads, building, bridge, dam, etc. When it comes to private sector, you tell me what type of expenditure generally you want us make in terms of capital. Sir, buying of vehicles. Maybe I bought a car. Do you think I buy on a monthly basis? No sir. Maybe once in 4 years, once in 5 years. That is a capital expenditure. I construct my house. That is also capital expenditure. Maybe I bought one, what is it? Maybe house, maybe flat, maybe any type of expenditure which are not recurring in nature. Those called as capital expenditure. Example. Construction of house, buying vehicles, etc. It even applies for what is that? Private business sector also. Sir, what is private business sector? They do it for the purpose of construction of their factories, buying some big machineries. Those things are capital expenditure for them. So if you total it up, or if I summarize, what did we discuss? We were discussing the method of computation of national income. There are three methods. One is production method, income method, which we completed, and here we are discussing expenditure method. Under expenditure method, if you sum up expenditure by private producing enterprises plus private individuals plus government sector on both. What is that both? Consumption plus capital. That is called as the total expenditure. You tell me, why do we consume the expenditure? For the purpose of consumption of goods and services only? Oh, it is like under production method, we used the, what is that? We find out the totaling of all the producing goods and services, totaled up money value, everything, we got it, total production method. When I say the expenditure method, expenditure made on for the purpose of consumption of those goods and services only. Oh, that means here also we used to get, whenever I total it all these things, I don't get the national income. Again I get GDP at MP, gross domestic product market price, because it is on the consumption of goods and services only, nothing else. Under income method it is totally different. Under production method and expenditure method, even if you look at the triangular diagram which we just drawn, these two things are interlinked. Expenditure made for the purpose of consumption or production of goods and services. The same things we get here. So once we get that GDP MP, can we find out NNPFC? What is this NNPFC? We already know. Again, I don't want to repeat, but I'll repeat only for one time. National income. How do you find out? Again, plus or minus approach you can easily apply. Sir, what is plus? What is minus? We have gross. We want net. Minus depreciation. We have domestic. We want national. Plus NFIA. We have market price. We want factor cost. That means minus NIDT. You can easily able to do it is like plus IDT minus subsidy. All those things are also possible. You can do it in any permutation and combination, whatever we discussed in the first class. Is it okay? Yes. These are what the three methods of computation of national income in India. Understood? Is it okay? There are few illustrations on this. We will discuss those illustrations at the end of next unit. Because there are some illustrations which are there even on the second unit also. Determination of national income as per Keynesian, we call it as JMK, John Maynard Keynes, Keynesian theory, where we find out the national income using 2-sector economy, 3-sector economy, 4-sector economy, and there are some other small concepts also there. Those things has to be discussed in the next class, and we will discuss the illustrations after those things. All the illustrations we will try to combine it in like one video. Is it okay for you? Yes, sir. Then what do we discuss now? So after this, there is one small concept called as GDP welfare. Not GDP welfare, we call it, we'll see it later, GDP deflator. We will discuss that GDP and welfare later. It is GDP deflator. What is this GDP deflator? GDP deflator is an instrument, or it is a tool which is used to find out the inflation which is there in an economy. If you see the formula, you will easily understand. Sir, what is that? GDP deflator is equal to nominal GDP divided by real GDP multiplied by 100. This is what the formula for GDP deflator. Sir, what is nominal GDP? This is what we call it as constant prices. Sorry, current prices. What is real GDP? Can I call it as constant prices? It is constant. It is current. What is the difference between constant and current? Sir, it is inflation only. By using this thing, you can easily find out the inflationary part. For which we have one question in our material. We will discuss that question, then we will proceed further. We have our class material. I am directly looking into that question. We will discuss all these things elaborately in the class. But because we are discussing, or we are doing the revision of those things, we are discussing in the overall manner. The GDP deflator. This is our regular material, regular class material. You see here, the calculation of real GDP gives us the useful measure for inflation known as GDP deflator. Okay. The GDP deflator is the ratio of nominal GDP in a given year to the real GDP of that year. If current prices is this much, how much will be the constant prices? What is real, what is nominal? That is the ratio. 2:1, 1.1:2, something, that ratio. If you see there, GDP deflator equal to nominal divided by real GDP. That is 100. It is with inflation and it is without inflation. With inflation, without inflation. GDP deflator, as the name implies, it can be used to deflate or take out the inflation from the GDP. Look at the language they are using, very beautifully drafted. Take out the inflation out of GDP. And if you want to, because the base year is always 100, we will get it by percentage. If you want to know what is the inflation rate in year 2, second year GDP deflator minus first year divided by first year multiplied by 100. You can do it later. This is what the question is. The nominal GDP and real GDP of a country in a particular year is 3000 and 4700. What is this 3000? It is nominal. This 4700 is real. Calculate GDP deflator and comment on the level of prices of the year in comparison with the base year. See, we should compare the current level of prices to the base year prices, for which we have to compute the GDP deflator. GDP deflator, as we know that it is nominal divided by real. Sir, nominal you said it is including the inflation. Yes, it is including the inflation. What if the prices are less? That's okay, don't worry. You just substitute the numbers. GDP deflator equal to nominal divided by real multiplied by 100. 3000 divided by 4700 multiplied by 100, it is 63.83 percentage. Sir, what is this? Sorry, 63.83 percentage. The price of a commodity which is worth 100 rupees in the base year, the same goods and services are worth in the current year only 63.83 rupees. 63.83 rupees. Sir, what does it mean? It simply means 100 minus 63.83. The prices of the goods and services has come down by 36.17. Sir, how did you take out the inflation? No, it is not the inflation. It is the deflation now. It is what? It is the deflation. That means prices did not increase. Instead, the prices has come down. It is irrespective of anything. It is the deflator. Inflation means increase in the prices. Deflation means decrease in the prices. Both are same. Understood? That is what we call it as GDP deflator. The comment is like the price levels has fallen since GDP deflator is less than 100. That is at 63.83 percentage. That means 36 point some percentage it has been fallen. 36.17 percentage it fell down. Is that okay? So this is what the concept of GDP deflator. Then what are the other concepts which are remaining in the unit number 1? There are one concept called as who will measure the national income in India, that statistical things. There is one line I'll just discuss because it might be asked for MCQ. The thing is, in India, there is a ministry called as we have Ministry of Finance, Ministry of Home Affairs, Ministry of Defense, Ministry of Economic Affairs, Corporate Affairs, everything is there. The same way, we have a ministry called as MOSP and I, Ministry of Statistics and Program Implementation. Under that ministry, there is an organization called as Central Statistical Organization. What is that organization? Central Statistical Organization. That organization is responsible for totaling out, compiling all the national income in India. It is important from examination point of view. You should remember this. What is it? Central Statistical Organization under MOSP and I, Ministry of Statistics and Program Implementation. That is what important. You remember that. But under the state level, the district directorates are given the responsibility for the purpose of finding out those things. Generally, this district related part, they will not ask in the examination. You just remember that MOSP and I and CSO, Central Statistical Organization. Is it done? Yes, sir. That is also done. We almost covered 80% of our unit. Remaining 20% is, there are two small concepts. One concept is GDP and welfare. And the second concept is this one, limitations and challenges of computation of national income. Sir, what is this GDP and welfare? I'll just try to tell you in a single line. You keeping that point in mind, you read that GDP and welfare. Sir, what is it? See, how do we come to know that our country is growing or not? Is our country economically growing or economically coming down? How do we compare? There are so many indicators. National income increase is happening, GDP is increasing, so many employment, human capital, those things are increasing. Can I say GDP is the only indicator to identify the welfare of the country? No, sir. GDP is one of the indicators. That is what you should keep it in mind. GDP is not the alone indicator, but GDP is the one of the indicator for the purpose of finding out the welfare of an economy. So you keep this in mind and read that. Why that GDP does not represent the true welfare of a country? Because it excludes so many transfer payments, self-consumption, those things, that you keep it in mind and you will read. Limitations and challenges are like, as I discussed, hidden goods, black market, black money, that hawala money, those things are coming there. You read it, we will try. After the end of this chapter, if there is any time, then we will try to cover it out. So, thank you. Take care. Bye-bye. If you like this video, do subscribe to the channel, like the video, and press the bell icon. Don't forget that. Stay tuned for next videos where we will be going to cover this entire economics in a series, a part by part. Thank you. Take care. Bye bye.